I will call it a day if it comes to that point. So now we're coming back right here. Let's resume. So here's where we left off. Now it's a brand new day. It is now Wednesday, June 5th. And let's see.
Before, sorry, I'm gonna interrupt you. Before we go to the expense part, why not we didn't use that $2,000 loss on disposal of asset?
In this case, I want to go through the scenario because in this case, yes, we do have a loss on disposal of asset. But what I'm gonna do is I'm gonna make purposely mistakes, and we're gonna fix them on the line because I don't know if that makes any sense, but this has already been pre-done. This file's been used over and over again. The way I set it up is to kind of teach you a lesson at the same time, like why we make these mistakes or why do we need to do something like this. So in this case, that's actually going to happen in the future. And I purposely make these mistakes so that then we can go back and correct it.
Okay,
Okay, good eye there. Um, but yes, so yes. Okay, so coming back to this, now we are finally coming back here for um, the next day. So it's June 5th, Wednesday, and now we need to pay rent to landlord properties. Okay, so they're requiring us to pay at least 4 months in advance with a rent deposit of 1 month rent deposit. And so in this case, right, we're going to be paying for the month of June, July, August, and September, right? In this case, right, since we're paying for 4 months, right, we need to also calculate what the total deposit is because they want a 1 month deposit from us. All right, that's what most rental places do. They usually say, hey, if you're going to rent this place, I need at least 2 months in advance from you. And that's going to be treated as a deposit in case for any reasons where you do end up having a financial situation happen to you and you can't afford that month. You're covered with that deposit. So in this case, they're only asking for 1 month worth of deposit. Now, in this case, since I'm have to pay for 4 months, I also have to consider that since this is going to be basically for the month of June, July, August, and September, I need to calculate what that 1 month for is for the current month, which is going to be treated as a rent expense because I need to use it for this month. And then the rest of the other 3 months are going to be treated as a prepaid account because you're making an advance payment to landlord properties to guarantee you that you have this place to be rented out to you for the month of July, August, and September. So that's what this breakdown here is. Okay, first we got to recognize what is the rent expense for June, right? If we take a look at the number here, we have a total of $6,000 for a total of 4 months. So 6,000 divided by 4 gives you 1,500 per month. So that's how we break it down here, where we're going to be calculating for June. So 1 month is 1,500. And then we got to save for July, August, September. Those are going to be prepaid because they're already paid off in advance. So that's going to be considered a intangible asset because we have paid somebody in advance for a service. All right. And then last but not least, we need to record the deposit as well because this is for, in case the renting place needs something happened to it, a flood happens. Therefore, that 1,500 that deposit can go for fixing the building, can go for in case you can't afford that month's payment, etc., etc. It's a security deposit, right? So in grand total, I'm going to write a check to landlord properties for a total of $7,500. Now here's where the fun begins because now we officially started out writing our very, very first check and we have our very first vendor. Mr. Landlord Properties. Okay, so there's a lot of transactions that are going on in this one scenario. So let's go ahead and just break it down one at a time. All right, let's start off with our journal. Okay, so start off with your journal. Okay, we are gonna follow exactly what I have written on there, right? We're gonna record it exactly like this. So first things first is we're gonna recognize the rent that we paid for the month of June, okay? Which we know, all right? So that's rent expense. So let's go ahead and take a look at our chart of accounts. What account number is rent expense? $62,000. And we know it's for a total of $1,500. Okay. Next is going to be a prepaid. Okay, let's go take a look at our chart of accounts if we have something that is prepaid. Okay. So as I mentioned before, it's an intangible asset. So here we have a prepaid accounts. And right here, we already have the deposit. So might as well just grab the deposit here as well. All right. So we have 18,600 and 18,700. Okay. So prepaid accounts. And we have the deposit. Okay. For 18,600 and 18,700. So again, in this context, right, I'm making an advanced payment for 3 months for July, August, and September. So if I take my 6,000, subtract 1,500, you should get 4,500. Or you could take 1,500 times 3 months to give you a total of 4,500. All right. And again, you could do simple math too. You could calculate that. You're saying if it costs 1,500 per month times 3, because that's what my advance payment is for, then it's for 4,500. Okay. Last but not least, my rent deposit is for 1,500. So once again, to verify and confirm that I didn't make any typos, I am going to run my formula for equal sum, okay? And I'm going to add up all my debits here, and I should get a grand total of 7,500, okay? And then last but not least, we wrote a check. So this is going to come directly out from our checking account, okay? So that's my journal here. Now, your description is going to hold information such as, first things first, who is this person you wrote a check out to? Who is the vendor that you are working with? In this case, Landlord Properties. Okay. Now, you could put description saying this is for rent. And put things like I paid 4 months in advance or 3 months in advance. So I'm going to say 4 months rent and deposit. Okay. And then another crucial information is going to be your check number. Now, in this case, I don't know what my check number is. So now we need to go to our check register, because now that is where we're going to be keeping track of every single check that we have written out, right? Just like a normal checkbook itself, you should keep a track record of what checks you've written out and who did you write them out to, for what amount, and when you wrote this check out for. So in this case, my very first check in my checkbook is for 1501. So I'm going to go ahead and write and cut my check right now. So it is June 5th. The amount is for 7,500. Okay, and who did we write this check out to?
Landlord Properties.
Landlord Properties. Okay. So now not only do you have a receipt trail, a backing trail, you have this check as a trail of means of a proof that a transaction has happened. So there you go. Okay. Now usually you'll have a contract with any rent payments like this, right? But in this case, I'm gonna try to make it as simple as possible. Okay. So there we go. I wrote my check. It's check number 1501. So that's why I'm going to go back to my journal and I'm going to fill that piece of crucial information in there, because then now I'm linking, excuse me, all of my, I'm linking all of my transactions with the proper source documents. So my check number is going to be my first source document. Okay. And we wrote it for the 7,500. And again, checking account, I can just go look right above. It is number 110,100. Okay, and it's for the 7,500. So there we go. Now all of our information looks good. Okay. I guess I can expand this part. Okay. There you go. If you like your cells to look uniform, you can change it however, stretch it, expand it, however you like. Okay. So there you go. Now my first check has been written. Okay, and everything looks good. So then now I need to go to my general ledger before I can move on and introduce you to my subsidiary ledger. Okay. So very first one, let's go down to my general ledger, okay, and plug in all those numbers in my account. So first thing I recognize is rent expense. Okay. So I'm going to go to my operating expenses because it's account number 62,000, which indicates that this is an expense account. Okay, so 62, so rent expense is here. All right, and what I'm going to have here is I'm going to make my note saying this is rent for the month of June. Or you could say, simple as easy, June rent. Okay. General Journal 1, because we're still on the same first page of transactions here, same first General Journal page. And this time, because it's an expense to me, I debited my account. So therefore, my beginning balance and my normal balance for my rent expense account is going to be for that 1,500. Okay. Okay. Everyone good with me so far? Okay. So then let's see what's next. Next is going to be my prepaid accounts. So go back to my assets. I'm going to locate my prepaid accounts. Okay. So it should be towards the very bottom. Okay, here we go. I got my deposits, prepaid accounts. All right, 6.5. And in this case, I'm going to go ahead and make a note to myself saying that this was 3 months advanced payment for rent. Okay? Because that's what that 4,500 is. It's 3 months worth of rent. And you could even go more into detail by saying you confirm this because I wrote a check number 1501, right? And whatever means it helps you keep track of your records, or the more detailed you are, the better explained the transaction is. And the more, in case when you go through this scenario and you don't know what you wrote here, or you have no idea, you just wrote prepaid expense or prepaid rent expense, how do I know how much rent I paid for, right? So the more detailed you are, the better, the transaction will reflect, or better information you can get from this transaction. So once again, I have it like there. And because I made a prepaid advance payment for 3 months in advance, therefore, I should have my prepaid accounts reflect as 4,500 because I debited it on the debit side. Okay. Right? And then, of course, right below it is my deposits. So 6.5. And I'm going to say this is rent deposit. Right? You could put security deposit, whatever it means that you want to reflect there. Right? And it is for 1,500. So once again, a deposit is an intangible asset because can you physically touch a deposit? No, but it's in terms of a service that can be provided that's worth 1,500. Okay. And then, of course, last but not least, we have a checking. We wrote a check number. Okay, so therefore, I'm going to go all the way up to the top of my window under checking, and I'm going to write here that I wrote a check for rent. Now, you can do this. You have many ways that you can enter in the note. Now, for me, I think if I just put in my check number, that should tell me everything I need to know. Because here, right, I wrote the check number. The check number, if I look it up in my check register, it will tell me exactly who I wrote this check out for. Now, if you want to, you can add a little column in your check register for notes. So if you do that, then, just having your check number alone tells you when it happened, who did you write the check out for, how much it was worth, and then if you have a note section in there, you could easily find out that you wrote this check out for rent. So in this case, it's very powerful to use other source documents to provide proof of a transaction. So once again, this is all I need. And the second thing here is if I write in that this transaction happened on General Journal number 1, that's going to pull me to this page right here, and I can see myself that I wrote a check to Landlord Properties for rent expense. Okay? All right, and plus my description says I bought 4 months worth. Okay? So once again, now we see this, right? In this case, we're decreasing the money in our checking account, right? So because we're decreasing it, we journalized it as a credit for 7,500. Okay? And if I press enter, now my formula recognizes that a change has happened. So now that it recognized that my credits, which is normally subtracted out from my balance, now it tells me that I only have 16,125. Okay? And this, once again, if you don't make any typos or anything like that, then you can guarantee that Excel's going to produce the correct answers for you every single time. It's just the human errors that mess up everything. So in this case, I have $16,125 in my bank account now. All right. So far, so good.
Where did you find the checking account on the journal?
This is my
Mhm.
This is the ledger, yeah. Mhm. So this is how I'm creating a running balance in every single account that exists in QuickBooks. Or I'm sorry, not QuickBooks. This is every account that exists in my chart of accounts. Okay. So everything that we have here in this chart of accounts is going to reflect in this ledger, and it's going to give me every account balance because I need to have this done in order to do step 5, which is run my trial balance. Okay. I need to know what each account and what they reflect. Especially the most important one is your checking account itself. You need to know how much money you have at all times. So that's what this one is. This is under assets. It's the very top of the page. Okay. Right? Everyone good? Right? So now that I've entered in my last account in there, right? My checking account is and the checking account was my last account that I had in my journal. So therefore, now that I complete the journal, the ledger, the next step now is we are going to introduce you to your subsidiary ledger. Right? Under the subsidiary ledger, you're going to notice that it's going to be the people that are involved in your company. As I've mentioned this before, right? Every time you deal with a customer, you need to keep track of what they owe you. If you don't keep track of what they owe you and you keep having these customers on an account, you know, that's not very good reasons for having accounting because you'll never go after them. You wouldn't know who owes you what. All right? Same thing here. We need to be responsible to know who we actually owe. And then in this case, that's going to be a vendor, right? People that you owe to is going to be your vendors, people who provide a good or you know, you could purchase from, or people who provide service to you. All right? And then again, we have another tab here for your employees because we will be having employees, and our responsibility to do for our employees is to pay them. Okay? So here we're dealing with a vendor, right? Because landlord properties provided service to me. They provided a place that I can rent out to run my business. So in this case, all of this is going to be in alphabetical order. So landlord properties is going to be under L. Okay, there's the Las Vegas RJ. Here it is, landlord properties. Okay. So first key information here is what happened? So landlord properties, okay? We encounter them on the 5th of June. My notes here is, oh wait, I'm in the wrong one. Landlord properties, there you go. 6 June, okay? And now landlord properties, what did I do with them? In this case, I paid for 4 months rent and rent deposit. Okay? You could go as far as being very descriptive of how much rent is. So I would say rent per month is equal to $1,500. Right? That way you know how much that is, and the rent deposit is going to be 1 month. Okay? All right? And then there you go. That should be plenty of information. Now the invoice number, once again, I'm not going to go into too much detail here. Usually it's a contract number or something like that. In this case, I didn't have one, so that's okay. This is for practice purposes only, but if you did have a contract number, that's going to be proof that a source document is proof that you did have rent with this person. But in this case, I didn't have it in there. That's okay. It's not a big deal right now. Okay. Post reference is also going to be your general journal. So again, this general journal happened on the very first page. Okay. Now, how we're going to use this as we go down the line and we actually start making purchase orders for items of inventory. Once we reach that stage, then we'll progressively keep explaining how to utilize this actual worksheet itself, okay? Because every column is going to be different. Now, most cases, right, as a rent person who's going to be providing this for you, you're not going to have any terms. So therefore, this section right here, you're going to ignore. You're not going to have a discount. You never get a discount with rent, especially because landlords, right? They're not very flexible, right? If you don't pay rent, then you have 15 days to pack up your stuff and leave. Okay, so there are many different landlords that happens here. So in this case, they're never going to give you a discount or any due dates here. But we can know this, right? At least the rent should be due in the very beginning of the month, which is in this case, our contractual agreement doesn't say because we've already paid our duties. We paid for 4 months in advance. So therefore, we don't owe any extra until my contract is up for those 4 months. So in this case, I don't have a due date. Okay? Prepaid amounts. Yes, I did prepay, but in this context, you didn't pay for anything other than, like you didn't make a payment in advance for you to have rent. Actually, that's right, but in context, that's wrong because in this case, right, you cut them a full check for $7,500. So that already includes the prepayment for the next month. So in this case, in this context, right, when we use the prepaid accounts amount, that's for in case you're purchasing assets and you're forced to deposit money ahead of time. That's where you'll use the prepaid amounts. In this case, I didn't make a payment to my rent place before I met my rent person. No. I just came up to them and we made our contractual agreement that I owe a total of $7,500. Okay? And that's going to be the invoice amount because that's what you got billed. All right? And then last but not least, did you make a payment? Of course you did. Right? Yes, you did. And that's where you could add that piece of information in your notes too, saying, I have proof that I made a payment because I wrote check number 1501. Okay? And the great thing about Excel is you're able to edit information as much as you can. And again, that's also the same thing with accounting in general, especially when you use technology like this, right? The only thing that I would ask you to do is not to ever delete anything that you wrote in there. Don't remove it. Don't edit to the point where you clear it out because that's going to cause problems in the future when you're looking back at your ledgers and your journals and you realize that you scratched out so much information that you don't have a tracking progression of your transactions. So in this case, right, I did make a payment, and how did I pay? Through check number 1501. Okay, so this is where in this case, this is going to be more of a simple type of equation, just because you're not dealing with much information. But this formula will become more relevant and prevalent when we dive into making purchases of fixed assets. Okay, so this formula here for accounts payable, this is going to let me know how much I owe landlord properties. And how we're going to utilize this is going to be your equal, right? You're going to start your formula. You're going to start off with first your invoice amount, okay? You're going to subtract any prepayments, okay? You're going to subtract any returns and allowances, subtract any discounts, and then last but not least, subtract any payments. And then enter. All right. Once again, that is going to be your amount, your invoice amount, subtract your prepaid accounts, subtract your returns and allowances, subtract your discounts, and subtract your payments. Okay? So all those things that are subtracting, right? They go against the invoice, right? If you return a product, that goes against your invoice because you no longer owe it. If you got a discount, you no longer owe that amount. If you obviously pay for it, that obviously is going to decrease the amount. So in this case, let's say I didn't pay my rent, right? And by having that formula in there, it's saying that because I got billed for this invoice for $7,500, now that means I owe $7,500. But in this case, I made a payment. I paid with a check for the $7,500, so therefore I don't owe Landlord Properties anything for this transaction right here. Okay? Was that a question? Questions?
No.
Okay. So once again, as we progress and start making our batches of purchase of inventory and then purchases of fixed assets, this whole section will make a lot more sense. But for this kind of person or this kind of vendor, you're not going to have discounts. Now, you may have a returns and allowances, right? But we talked about this, right? Good luck trying to get money back from your landlord, because it's almost near impossible, and there could be possibilities where you have to take them to court in order to get your money back. So again, a lot of these scenarios are going to be on a one-to-one basis. Not everything's going to apply, but I built this table so then it's universal for, and it works for all kinds of vendors. All right. So now that we have this one right here, this is the subsidiary ledger, and now this is telling me right now, I owe Landlord Properties nothing. Okay. And down here at the very gray, what this does is it's actually a sum of every invoice, every bill that you owe, right? And it tells you the amount. If you calculate it right there, the equal sum, and you highlight all the account payables, right? This is going to be your vendor balance, meaning Landlord Properties, we had one contract right here, and I still owe you nothing. Okay? All right? And this is going to be more, again, relevant when we dive into the very first one here, when we start owing vendors such as All Things Ceramics. You're going to be billed multiple bills. So in this case, right, you're going to keep building your cells for every single transaction that occurs. And when every single one occurs, then you're going to get a sum of what you owe that vendor in grand total. And that's what the gray is, okay? All right, so that is the subsidiary ledger. All right. Okay, so let's see what has happened next. All right. So then right here on June 5th, what did we do here?
Got a new employee.
Not an employee.
Okay, independent contractor maybe.
Okay, yes, independent contractor. Now, this independent contractor, what is their job?
To design the place.
It's to design the place. Okay, so this person, we hired Kim Robinson to look at the place and give us an idea, right? That's what a consulting does for interior designing. They're just going to give us an idea on how to make the coffee shop look a certain way. And what I'm going to do is I'm going to have contractors to come in and fix up the place for me. But in this case, I'm just getting an interior designer to come in and give me idea on how I should have my coffee shop look. So in this case, is there any transaction that's going to be going on with Kim Robinson?
No.
No. All I did was just hire her. She did not bill me. I don't know what amount her fees are going to be up to. And I don't know. The only thing I did was hire her. Okay? Did she complete the job? We don't know yet because we never got the bill. Okay? I could have hired her and said, come tomorrow. Come the next day. All right? In this case, I just hired her. Right? So then, next thing is next. Right? What did we do here?
That's an invoice, right?
This is not an invoice. You're right there. But what did we do?
No sales.
Who sold to? Who sold? Let's take a look at this, okay? Where is this a receipt? For who? Did we buy something or did we sell something?
Says purchase computer.
We purchased a computer. So in this case, this is the receipt that we got from the actual physical store. So we went to, it says right here, we purchased from Computers R Us, okay? And this is the actual receipt that I received because I went to the in-store and I picked it up myself and I walked out the door with a computer and a printer, okay? So let's take a look here. So we made a purchase of fixed asset, right? We bought a computer and we bought a printer. Okay, so here let's take a look at what those amounts are. Okay, we have the computer costing $16.95, all right, and we got a printer costing $350, right, giving a grand total of $24.45. But here, because we bought it in the store, we got subject to sales tax. Okay? So therefore, the tax right here was for $168.71. So in this case, right, my total amount that I paid was $2213.71, and I paid with a check number 1502. Okay? So in this case, right, I have all the details, right? Now, first things first is this is a fixed asset. What's the total cost of the fixed asset?
The 221371.
Okay, if you're looking in this case, yes, but I'm talking about the definition. What constitutes as a total cost of a fixed asset?
Everything that it costs you to get it into working service.
Correct. Now, of course, a computer and printer, all you got to do is plug into the wall. It's already done. So we don't need anything more except for to bring it to our store and hook it up to the internet source and plug it into the wall. Straightforward. So it's already in it's already able to be placed in service. However, what do I need to include in the total cost? What did I get charged extra?
The tax.
We got taxed. So therefore, I bought 2 items. Now, how do I distribute the tax here? Do I split it in half and call it a day? how would I distribute the tax if I purchase a computer and a printer?
With the tax rate 8.25.
That is correct. You're going to distribute the tax based on the rate itself. Because even if you tax it as an individual, if I bought my computer separate from my printer, you're still going to end up paying almost the same amount of tax because the rate is a pro rate. It's going to be prorated, meaning that every item on your list is going to be taxed at that percentage. So in this case, I'm going to take my $16.95, I'm going to apply my tax of 8.25%, and that's how much tax I'm going to be distributing amongst my computer and my printer. Okay? So now that we have that details down and we're confirmed that we understand that the tax is going to be included in the total cost of the item, let's go ahead and dive right into our chart of accounts to recognize if we even have these accounts that exist in our books. Do we have a computer account? Do we have a printer account? And in this case, yes, we do. 14010 and 14020 for my computer and my printer. All right. And how did I pay?
With checking.
I paid with a check. Good. So in this case, right, I'm acquiring my assets. So in this case, I'm increasing my computer account because I'm purchasing a fixed asset. All right. And I also am going to increase my printer account because I got a printer and I paid using my check, my checkbook, right? It says right here down below, I used check number 1502 to pay for this. So, all right, my computer account was 14010 and my printer account was 14020. And once again, my checking account number, I can just look right above, 10100. Okay? So now I know for a fact that I have a grand total of 2213.71. So what I'm going to do is on the side of the journal, right? This is what I'm going to allow you guys to do because once again, it makes it easier for you to calculate all of your information, right? And that's what you can use. You could do that. You can write notes on your journal. That is allowed. All right. This is where you could do your T accounts. If you guys remember back in chapter 3, you can put your T accounts here. You could just do a quick side off section to determine how much tax need to be distributed, right? So in this case, that's exactly what I'm gonna do. I know that my computer is $16.95. Okay, and I know that my printer is $350. All right, so let's go ahead and calculate how much tax is gonna be for each one. So if I go ahead and do this and I say 0.0825, the amount of tax that I'm going to be charging for my my computer is $139.83. Now, see, I left a second decimal because this is what's going to determine this. Now, if you separate the tax and purchase each individual item, you're taxing it based on the selling price, right? But in this case, I bought the computer and the printer together. So therefore, this tax is going to be based on the combined amount. So you could get a discrepancy here because you could have half a penny that's supposed to be increasing one side or the other. All right, and that's where we have to kind of look at our calculations and see which one is actually the best place to put the other half of the penny. All right, so in this idea, okay, I have, right? I have 139.83 and 23 28.87 5. Okay? So here I have a split penny, right? And if I were to calculate this, now it's telling me that I have I have the 71. So in this case, right, I need to decide. Now, most cases, right, you're going to distribute that half of a penny on the more expensive product because obviously you're going to get taxed more, right? You wouldn't want to charge more tax to an item that is least likely to get taxed a lot. So for this example, right, tax is based on the rate. So because I have a more expensive item, I'm going to be paying more tax to this item. So here I need to make the executive decision that I'm going to split this penny and I'm going to put it towards my computer. So in this case, my computer is going to be 16.95 plus 139 and 84 cents. I'm going to round up for my computer because that half of a penny is going to go for more, the tax is going to be related to the more expensive product. So in this case, I have it as 1834.84. Okay, because if I were to just round up on both sides, right? Check this out. I'm gonna have that penny discrepancy. So let's just round them up for example. Okay, so in this case, 350 plus 28 and 88 cents. Okay, let's add our totals up together. Okay, in this case, my total amount that I pay is going to be $22.13.72. But that's not what I paid. I paid 1 penny less because in this case, if just looking at what my taxes are, they're split into half a pennies on both sides. So in this case, this is why our journals need to match our source documents, but also that the debits and credits must match. And in this case, I cannot round up for this for my printer. But let's look at it, right? It's 7.5. Okay, so it's supposed to tell you that you're supposed to round up, but in this case, I'm going to be rounding down for the printer. So it's going to be $3.50 plus $28.70. 87 cents. Okay, because then now I have my payment to match my source document. Okay, so that's the tricky thing about having tax because it's based on a prorated amount. However, once again, if you bought the computer and the printer separately, then you already have the tax already separated. Okay? In this case, it's combined. So therefore, I have to take the time to distribute my tax. And in this case, I need to distribute and round my tax higher for my larger products because the tax rate is going to be more higher on the computer than the printer. So that's how we split the tax, and now this is what we're going to record in our books. All right? Any questions there on how I split the tax? Okay. So now I wrote a check. So therefore, I need to go to my check register because I paid at time of that store. So therefore, I need to make sure that I update my check register and validate that I wrote a check for $2,213.71 to Computers R Us. Okay. Once again, if you want to, you're not obligated to. If you want to keep your check register a little more organized, you can add another column in there to make mental notes, because usually check registers or checkbooks that carry this little miniature ledger at the top of the checkbook usually has a little small section for you to write your notes in there. Even on the check itself, it gives you notes so then you can write a reference point of what this check was written out for, right? That's up to you, but once again, it's, this isn't as necessary as you think it is. Once again, I'm just showing you the basics of how to do bookkeeping, but if it helps you to understand the transaction, then go ahead and add an extra column to make memos or to have like a note saying why you wrote this check out. Okay? So in this case, right, check number 1502. So go back to my general journal, and now I'm going to fill in the information that I need. Okay? So first things first is the vendor that you were in contact with. So in this case, I bought this from Computers R Us. Okay? Next thing is going to be linking any information that's in regards to the transaction. So in this case, I actually have a sales receipt number. All right? I'm going to do SR for sales receipt number 84143. Okay? Comma. Right? In this case, I don't need to say I bought a computer and a printer, because look at my journals. Look at my accounts. It's already straightforward that I bought a printer and a computer. All right? So you don't need to repeat more information in your description than is already displayed. Okay? So in this case, I know I bought a computer and a printer because I put them in the account for computer and printer. All right? So the next piece of information I'm going to put is, what was the check number that I wrote? Check number 1502. Okay? And there we have our journal there. Okay? So now I'm going to go ahead and fill in the rest of the information. So we already filled our check register. So now we need to go to our ledger. Okay? Because now I acquired some fixed assets. So once again, when I go to my ledger, the first thing that pops up is my checking account. Once again, if you do that, you may have a possibility to forget to journalize your printer or your computer, right? In this case, it's pretty straightforward. But when we dive into more into the transactions, as each transaction progresses, we're going to be using multiple accounts. So as we get to that point where we're looking at anywhere from 10 to 15 accounts at one time, you skip around, you might forget and completely forget about it and don't ever record it, and then that's where your discrepancy is going to come into place. So in this case, I'm going to go exactly in the order. So computer first. Okay. Computer is going to be under office equipment, which should be somewhere below here. So here we are. Computer. All right. And this is for the 5th. Okay. Now, since I'm in my computer account, I don't need to write I purchased a computer. It's pretty straightforward that you acquired a computer because you're debiting your computer account. What you can do is you can say the sales price and the tax on there, so you can justify why the total amount is what it's like. So in this case, I can add that information saying it was for $16.50 plus 8.25% sales tax. Okay, right? Which I could say, which equals 138 and 84 cents or something like that. Okay. Post reference, general journal number 1. You definitely want to make sure that your numbers are accurate. So I'm going to double check here what my tax was. It was for 139.84. So I need to fix that. Okay. For 139.84. Okay. And of course, I'm debiting my account for the 18.34 and 84 cents. And since it's my very first account there, my debit balance should reflect for that amount. Okay, for the 1834.84. Okay. So yes, we will be doing depreciation in this fictitious business. Okay, and once again, as you can see, it's a contra account to this actual computer. So it says accumulated depreciation computer. All right, and it's going to be placed under the assets. So here's my printer. Again, 6.5. This printer cost me $350 plus 8.25% sales tax, which was a total of which gave me a total of $28.87. Okay. $28.87. So therefore, once again, general journal number 1. And now this time we're going to be adding it in as 378.87. Okay. And once again, that's my beginning balance. Okay. Then last account on my journal is my checking account. So I'm scrolling all the way up. Here's my checking account. And once again, I'm only going to put in just my check number. Check number 1502, because that should pull up all the information that I need. That I wrote a check out to Computers R Us. And my reference point is going to be general journal number 1, and that's going to tell me the details on that transaction, saying that I bought a computer and I bought a printer. Okay. Once again, because I wrote a check for $2,213.71, it's now going to decrease my account to reflect that now my account should hold a total of $13,911.29. Okay? Okay. Last but not least, right? Now that we finished my journal, we finished my ledger. Now the next thing it's going to go to is a subsidiary ledger, because the most important thing about the subsidiary ledger is now that we have come across another vendor, what happens if my computer doesn't turn on? What happens if my printer is printing weird stuff? Like it's not correctly printing, or it's not connecting to my computer. Then I have the source document to prove that a transaction has happened, and I can return this product within whatever the receipt terms are. Okay, so that's the purpose of having a track record of any transaction, because at the end of the day, right, if I purchase an asset, I have the ability to return the asset and demand for a refund, whatever it is. Okay, so in this case, that's what I'm going to use this for, is for any means that my computer or my printer decides to not work. I can always come back and return it. right, printer, and I have my check number 1502. Okay. Now, invoice number is the same thing as anything that you would see. So, contract number, purchase order number, anything like that. In this case, my invoice number is going to be whatever my sales form, sales receipt was. Okay, so in this case, let's take a look. My sales receipt number was 84143. So 84143. And that's why it's important, because now when I have this, I need to attach or create a folder to keep a place where all of my receipts are going to be. So in case I do need to return something, right? I have proof that a transaction has happened, and most cases, now it's digital, so you don't really need a receipt nowadays. But if it's something that's like cash related, or if the store actually carries that product, they'll go ahead and honor your refund there. But for most cases, you definitely want to bring in that receipt, because once again, if you're making any changes, you need to update the information that's on that receipt, right? Post reference, once again, is General Journal number 1. Since we bought it in store, we don't get any discounts or any terms here, okay? We didn't go in there and made an advance payment, but the invoice amount was for $2,213.71, which we paid using a check number, which is 1502. So therefore, I did make a payment for the 2213.71. Okay. So now, okay, for any reasons, let's say I do return my printer, then I can go back here and I can add that I returned the printer, and I would get my amount refunded back to me, right? Because I already paid for it. So in this case, my formula, once again, is going to be my invoice amount, subtract any prepaids, right? Subtract any returns and allowances, subtract any discounts, and subtract any payments. So therefore, I owe Computer RS nothing, because I paid for the products at time of sale. So in this case, I don't owe anything. Okay? I walked out the door, paid for all the products that I purchased, and that's it. Okay? So once again, I'm only going to see Computers R Us just for one time. So I don't need to do a running balance here, because I know for sure I'm not gonna I'm not gonna be dealing with this vendor anymore. But this is just in case you do have something wrong with your computer or printer, then you're going to return the item and you get your money back. Okay. So in this case, that is it for today. Okay. Any questions up to now? Right. Right. So when we come back to this tomorrow, we're going to start off on this transaction here. So we're still continuing on June 5th. Right. So if you don't have any other extra questions, you guys are free to go. So have a great rest of your afternoon.